You're listening to a CNA podcast.
Hey, it's the Money Talks podcast, and I'm Tiffany Ang, starting the show for Andrea. You hear us talk about this every episode. Please follow us on Spotify, Apple Podcasts, or YouTube Music. That way, you can get an alert when a new episode drops each week. All right, on this episode, Andrea will be diving into some hard numbers. Don't worry, it's not going to be a numbers soup, because that's not how we roll here. Today, we're talking about how to read a company's financial statement. I promise you, this will be very helpful, especially if you're already buying stocks. But before we go there, let me give you some quick financial updates. CPF accounts have been the talk of the town these past few months. Last month, Deputy Prime Minister and Finance Minister Lawrence Wong announced that the special account will soon close for people 55 years old and above. If you're interested to find out how this will impact you, we have an episode on that. Search for CPF Special Account Closure, how it will affect you. That's available on our website, Spotify, or Apple Podcasts. Well, last week, we received news again that interest rates for special, Medisave, and retirement accounts will drop in the second quarter of this year. Drop, guys! Now, if you're about to panic, please don't, because it's only going down from 4.08% to 4.05%. That's really just 0.03%. I'm going to go out on a limb to say that this is not going to affect your retirement or Medisave plans anytime soon. But how are the interest rates calculated though? That got me thinking. Why are they even reviewed every quarter? Well, according to a joint press release by CPF and the Housing Development Board, this interest rate is pegged to the 12th-month average yield of the 10-year Singapore government securities plus 1%. That's a bit confusing? Well, it's okay. All you need to know is that the 2.5% on your ordinary account interest rate will not be affected. That remains unchanged for now. And on the news that caught my eye, economists have upgraded Singapore's first quarter growth forecast. According to a Bloomberg survey, the gains are partly due to none other than Taylor Swift, her 6 concerts, which wrapped all on 9th of March. Our GDP is projected to expand 2.9% in Q1. This is the fastest pace in 6 quarters. More than 300 tickets were sold for Taylor Swift's show, and many fans travelled in from other countries and cities. DBS economist Chua Han Teng told CNA that the concerts are estimated to add around 300 million Singapore dollars to 400 million Singapore dollars to Singapore's economy in the first quarter. Now, sectors which benefited are the hospitality, food and beverage, as well as retail sectors. No surprise there. But before we start celebrating, let's not forget that there might still be upside risks to inflation, as warned by the Monetary Authority of Singapore and the Ministry of Trade and Industry last month. So, as always, we say it here all the time on Money Talks, continue to make good financial decisions and please save for that rainy day.
Someone once told me investors don't like uncertainty. As a result, we want to know as much as possible before taking the plunge, especially when it involves a company stock. So these can include stock price movements, performance history, how much money the company makes, who is leading that company, whether other people are also buying that stock. Because, if someone else is buying it, it must be good, right? That's the Singapore mindset, right? But one tool you may not know that you have in your arsenal is actually the company's financial statement or earnings report. Companies release this data every quarter and then a full report at the end of the year. And we know this because we hear about it all the time in the news. But why does this matter? Do you have access to them? And more importantly, which lines exactly in this number soup do you read? Just for fun, you may want to quickly pull out any company's financial statement, maybe even yours, and refer to it as you're listening to this, because my guest will help break it down for us. He's David Gerald, founder, president, and CEO of the Securities Investors Association Singapore. We call it CS here at CNA. Welcome, David.
Thank you very much for having me, Andrea.
Yeah, it's a pleasure to have you.
And your introduction is really interesting because lay people who invest in companies very often don't realize that they are actually becoming owners of the company.
Exactly.
And not just making money just for 1 week or 2 weeks.
You are absolutely right.
Right. So they are plowing their money into a company. So we have been educating a large number of citizens who have either invested or investing or thinking of investing. We also have been questioning companies on their annual reports, which is what investors should do when they invest in a company.
Exactly.
They should plow through the information.
Yeah.
So investors must make an informed decision before deciding to part with their money on the company they are choosing.
Yes.
All right. So what is the information? The information is largely based on financial performance, financial statements of the company. And the annual report has got the financial statement, the cornerstone. So it offers vital insights, the financial statement of the company. Now, it relates to the health, financial health, the financial performance, and the trajectory of the company.
Ah, okay.
Okay, so that is therefore the starting point. The financial statements are dependable largely because they are audited.
Right.
They're audited, and auditors are governed by auditing standards. And they are taken to task if they deviate from the standards. So I think investors, in assessing risk and reward, they should be looking at the financial statement the way they should correctly do. And that's where you have courses, free courses, and very nominal sum of money is charged for interpreting annual reports. And financial statement gives a very good idea of how the finances are managed by the company management, the CEO, the CFO, and the directors of the company. How are they managing my money? Are they putting on the business, the core business they promised in the annual report? And when they started the business, they made announcements in the prospectus, this is what we're going to do.
And have they met those goals? So it's a point of accountability, really.
Yes.
So, you know how I said earlier that companies tend to release these statements quarterly and then another one at the end of the year. Sometimes there's a half-year one as well. Is there a logic to the schedule in which they release these reports?
The objective is to increase transparency.
Oh, I see.
And accountability. In the distant past, it was just once a year. But when the dynamics are fast-moving and you find the world's global situation and market situation is changing so rapidly, cyclical changes are so fast. So investors have to keep track of how the company is performing and managing these unexpected events.
Right.
All right. It's like, you get storm coming and leaves a devastation.
Yeah.
All right.
And you don't know how bad it's going to be until it's over.
Until it's over. So Monetary Authority did a good thing by requiring greater transparency for investors, greater information flow for investors. Then you make an informed decision.
Yeah.
It gives you an idea. Hey, last quarter, the income is down,
Yeah.
Let's find out why. And then the next quarter is worse.
Oh, no.
Because you're tracking.
Yes.
All right.
Yeah.
An investor in a company must track, must not go to sleep. You must watch. It's your money, hard-earned money,
Yeah. But do you think that too much tracking can cause anxiety?
Well, there is one view, which is that if you keep your management engaged in just counting numbers, they're not doing business. All right. But you have auditors, you have accountants in the company, you have financial people, and the business people go and do your business. Financial people do your finances. But I agree it shouldn't be too often, but I think there has been changes made to the quarterly reporting.
Yeah.
Yeah, so I think we are on a good wicket. and investors must be alert. You put money in a company, don't go to sleep.
We talked also about stock price performance, other tools that investors can refer to when determining a company's financial health and performance, right? So can those tools work hand in hand with the financial statements?
Yes, must so. Because the financial statement, it's not the only source of information.
Right.
All right.
Yes.
So basically, financial statement and then company announcements. Maybe CEO left the company.
Yeah, that's a big one.
Yeah. And CFO resigned.
Oh, yes,
All
that's
right.
a big one
Recently,
too.
we queried chemical industries. Why all the senior managers are leaving? It's got an impact on performance.
Of course.
Because these guys at management level leave, who is actually running the show? So I think if we were to look at why only, if people think only financial statement, they're performing well.
Yeah.
Okay, but there are many other things. Cash flow is very important.
Yes.
Cash flow will tell whether the company has got operating cash.
Okay, so at the risk of oversimplifying it,
Yes.
does more cash equals better health in a company?
Okay, let's talk about profit, which everybody looks at first.
Sure, yes, let's
All
do
right,
that.
so a company's profit is an accounting measure, okay, which can be subjected to management's judgment.
Okay.
But cash flow is harder to manipulate.
All
right, how much cash do they have now?
right.
Okay, cash flow statements reveal how much cash is generated and utilized by a company's operating, investing, and financing activities.
Right.
This is a very important thing for me to say to the investors. Positive cash flow ensures the company can meet the financial obligations. So you say, okay, my company has done well, it's got profit,
Yeah,
3 million profit.
no problem.
But what about the cash flow?
Right.
If profits are increasing and yet cash flow is weak,
Yes.
it's a red flag for investors.
Why?
Because then you're running out of cash.
Ah,
You can't manage your operations.
right.
You're going to have problems. Business is going to come to a standstill.
Right. It's the cash flow is a snapshot of the company's current operating
Yes,
capabilities.
capabilities.
Right,
yes.
right.
Okay, so investors should also watch a company's borrowing.
Yes.
Are they overgeared? You know,
Overgeared meaning they have too much
borrowing,
debt.
too much debts, too much interest payment,
Yeah.
too much you borrow from the bank.
Yeah.
All
And
right,
then how are you going to pay it off, right?
Correct. Are you sure you'll have income to cover that? Which offers insight actually to an investor into a company's short-term financial health.
Right.
All right. And its ability to meet immediate obligations. Immediate obligation, one of which is servicing the loan. If not, the bank moves in and then does a foreclosure, then what do you do?
Your company's done.
Gone.
Yeah.
So interest rates trending up in the market. There's now a trend for, let's say, for interest rates going up.
Yeah.
Is the company still able to pay the banks and maintain its dividends to shareholders?
Yeah.
When I invest in a company, they say, I'm looking for capital appreciation over time. As the company does business, is prospering, the profile is very good, income is very good, cash flow is very good. But am I getting dividends?
Exactly. Are you the investor
Yes.
who is owning a piece of that company? Are you
Yes.
getting it back, right?
Yes. So payment of dividends is good and it's a good indication of the company's healthy profile. But if they don't pay dividend, if they have money, they must explain. But it doesn't mean they're not doing well. But they may be using it for a purpose, a legitimate purpose of reinvesting the money.
And they have to be transparent about it,
They
right?
have to be
So if they
transparent.
have this money, the spare cash, for example, and they
Yes.
say, you know what, I'm not going to pay dividends to the investors because I want to use this money for R&D.
R&D. Yes, R&D is a very good
They
or
have to announce
acquisition
it.
of an asset, which
Right.
would enhance the value of the NTA. I think it is important for investors, therefore, to be educated and to have knowledge first
Yeah.
before plunging your hard-earned money into a company.
Yes. Hard earned is the key word.
Yes,
here.
yeah, hard-earned,
So we've talked about cash flow, and I
Yes.
remember you mentioning revenue. What's the difference between income/earnings versus revenue? And which of these, income versus revenue or earnings versus revenue, is important to investors?
The company is doing business in 3 different areas. They got money coming in,
Yes.
the profits.
Right.
All right. So the company's earnings is the revenue. Okay. So minus the company's expenses gives you the net profit. Okay.
Okay.
So question is, where is the net profit being channeled?
Yes.
All right.
The golden question.
Yeah, they're supposed to keep in the bank, or are they supposed to reinvest?
Yeah.
So what is the accountability here? What are they telling the investors? What are they doing with the net profit?
The other thing I wanted to ask you is the balance sheet. Is the balance sheet also an indicator of a company's financial performance, or is
Yes.
there more to it?
Well, a balance sheet basically provides a snapshot of the company's financial position
Right.
at a specific point in time. Key items to review include assets such as cash, inventory, and property. Liabilities such as debt and accounts payable. This is what the balance sheet will reveal. And shareholders' equity, how much equity has come in. Investors should therefore assess the company's liquidity, solvency, and borrowings, based on the balance sheet.
Right.
So these are the things the balance sheet shows.
Right.
Right.
Okay. Are there certain things in a company's financial report that we ought to spot and question? Are there hidden lines that are in a financial statement that are not immediately apparent, but to a trained eye perhaps will be a red flag?
To an analyst, they will be able to pick up debt levels, profitable ratios, debt ratios. They will pick it up. All right. Each item will be analyzed by the equity analysts.
Right.
They are subject to scrutiny by the auditors, and the experts will come up with criticism or analysis.
Right.
All right. That's where we go to.
In your experience, David, what are some of the things that companies do tend to hide or conceal in these financial statements? Just anecdotally.
They don't explain the processes very well, like internal control, risk analysis. All right. So it's very important for investors to know how the risk is being analyzed, how they're handling the risk. We don't get that very much in detail. Can they manage the debt? How are they going to service the debt? How much income is there going to be?
Yeah.
This is not explained.
Yeah.
There must be clear explanatory notes on the financial statements. Okay,
Right.
they were borrowed 5 billion.
Yeah. It's a lot of money.
And then we are expecting to get this much, right? But give us the assurance that you can service the loan. If you can't, don't borrow.
Yeah.
And if you borrowed and you're going to struggle, better get out.
Yeah.
Don't be in the company, don't keep your money there.
Yeah. How does a company determine a future projection, a future performance?
They are supposed to, based on certain metrics,
Right.
but usually the CEO, CFO will explain to the audience at the annual general meeting and also in the report.
Yes.
All right. What are the businesses that are doing well and how much better they will do?
I see.
Okay. What is the future income going to be like?
And that has to be backed up by data as well.
Yes. Data as
and that's
well.
what we have to look out for as investors as well.
Yeah.
When it comes to the future performance of the
Right.
company.
They must also qualify what are the risks.
Yes,
Okay.
of course.
Okay. What are the risks and how will they manage the risks?
Yeah.
One of the things investors must pay attention to is governance. If your money is put in a company, you must watch how it is being governed. Is it being put to the use they promise to the core business?
Yes.
Or is it going somewhere else? Are they paying themselves too much? All right.
Yeah.
Are there any wastage?
Yes.
How are you looking after your core employees?
Yes.
All right. Are they staying with you long?
You mentioned something about how auditors and analysts are there for you to ask questions to make sure that transparency is being fulfilled. Is that the only way that we as investors can trust that a company has been honest, has been transparent?
So at the annual general meeting, there are auditors present, but analysts don't come for AGMs, but shareholders must read the annual report.
Yes.
And if they do not understand, or if it causes them a worry, mark it and get up at the annual general meeting and say, Mr. Chairman, at page 17, I read this, I don't understand, can you explain? Okay, you say you're going to do this, but how are you going to do this? Over the years, investors have been educated on the annual reports. So in Singapore, accountability has increased by leaps and bounds. Investors are more educated. They are more discerning.
I'm glad to be living in an environment, in a time where Singapore is now regarded one of the best places to invest and set up a company and promote transparency for everyone, especially the investors. So David, I'm really glad that you were able to help us explore the numbers jungle that the company financial statement is. I feel like we're better equipped right now than when we first started this conversation. And as investors, now that we know what to look out for, it will definitely help us more in our investment decisions moving forward. So thank you so much for your time today.
Thank you, Andrea, for having me. And your listeners can always come to SIS for help.
Indeed. If this episode was exactly what you hoped it would be, let us know in the comments or wherever you are listening to this podcast. We are streaming on Apple Podcasts and Spotify, as well as YouTube Music. And if you have the time, please leave us a rating. The team behind Money Talks is Joanne Chan, Tiffany Ang, Crispina Robert, Junaini Johari, Sayu Wint. I'm your host, Andrea Heng.